Apes and apettes, welcome back to the channel. Another crazy day in the marketplace. I cannot express this enough. It is going to be very, very volatile. Now, here in this video, we have a lot of good news to go over with AMC. We also do have Credit Suisse that just issued a warning to investors that I do want to go over, as well as the short interest on AMC is at almost all-time highs. It is at all-time highs if you are looking at post-June rally. So there's a lot to cover. I don't want to waste time on the intro. Let's get into it. If you guys find value or simply entertainment out of this video, hit that like button for me, consider subscribing to the channel, and let me know in the comment section, are you bullish, are you bearish, are you excited, are you buying the dip? Let me know how you guys are feeling. And if you guys want access to all of my trades, link for the pinned comment down below to do so. Help support the channel as well. Now, getting straight into it, what we are seeing on AMC is we are down about 2% as of right now. It's almost the end of the day. All of this information is still very applicable. It does not matter. We only have a couple minutes left until the end of trading, but we are down 2% right now at 16.27%, and you are seeing the sell-off starting to slow down. I'm sure you guys have noticed this by now, but other stocks even right now are still down more than AMC. So I think that's a positive sign. I think we are very close, if not already under our fundamental valuation. So that's key. The charts here look just very bullish, but in my personal opinion, your worst case scenario is down to about $15 in the shorter term. I don't see us falling all too much under that for an extended period of time. Is it possible we drop to 14 tomorrow if Microsoft earnings are bad, if Fed Jerome Powell is super hawkish? Sure it is. Do I think we will stay down there? No. The MACD is bearish, and pretty much every other factor you could look at is pretty bearish, but this is a squeeze trade. It does not matter what happens on the day-to-day. The next big level we do have to break out above is obviously $20, and then the 20-day simple moving average in between the Bollinger Bands, and that's at $22.38 per share. But enough on the charts and a little bit of those technicals. Let's dive into what the good news is for AMC today. The article came out at 10:58 a.m. It says AMC reportedly in advanced talks to refinance debt. AMC is in advanced refinancing talks with multiple interested parties to lower its interest burden and stretch out its maturities by several years. AMC's total debt is north of $5 billion, but CEO Adam Aron has reportedly advised investors that it does not have any maturities coming due until 2023. Shares in the meme stock-backed company have slipped more than 40% since the beginning of the year, reversing major gains that helped AMC stave off bankruptcy last year. So that is good. He said this a couple weeks ago. Now they are getting very close to actually doing this, and that will be a big catalyst for AMC on a more fundamental basis, and it will boost up the share price of AMC, because the biggest bear case against AMC is they have $5 billion of debt, but they can service their debt. That's not going to be an issue in my personal opinion. If they can refinance this and get this down lower, it's going to cost money to do this, but it will save them a lot in the long run and make their payments a lot more manageable. And they do have this whole year until they do have to pay back any of those major maturities. And I believe the first one is like $300 million in 2023, and they have plenty of cash, so I wouldn't even worry about that whatsoever. They actually have $1.3 billion more cash now than they did have before the pandemic, so looking good in that aspect. As far as the Credit Suisse issues a fourth quarter profit warning as legal costs rise. The Swiss bank said a charge of roughly 500 million Swiss francs, $545 million is expected to push its earnings to break even. The profit warning comes after a series of high-profile scandals that have rocked the bank in recent years. In quotes, these litigation provisions have been incurred in respect of a number of cases where the group has more proactively pursued settlements and primarily related to legacy litigation matters from our investment banking business. So they can cover this up in whatever way they want. We know what's going on. They're lending out to these guys that are starting to get clapped in the markets. They're over leveraging, lending out to people they shouldn't be. So however they want to hide this and cover this up as legal costs, I don't know, $545 million of legal costs sounds a little bit excessive, but does not matter. We get the picture of what is going on. Another reaffirmation to us that they are actually in a bad situation, as well as many other banks. If they'll tell you that or not, that's a different situation. But when the markets do come down, things tend to start coming out. I've noticed that in my almost 5 years of investing as of late. Now, as far as the short interest being at almost all-time highs, if you're considering after the June rally, we are at all-time highs. 20.83% short interest of free float, 106.92 million shares that are sold short. Cost to borrow pretty much staying the same, still bullshit numbers. Share utilization 68.78%, days to cover at 2.51. So not too much has actually changed right here. The cost to borrow keeps fluctuating around, and the reason I call it bullshit is, if you have not heard my thesis on this, is you cannot borrow shares on AMC for less than 2%. That's just not going to happen. If you or me tried to do that, they would at least hit you with 4, 5, 6%. I would imagine. I mean, try to do it and see what they tell you, because it's not going to be 2%. That's ridiculous. You can't get a loan for anything for 2% right now. So that is the scoop on that. As far as what is happening today, what's going to move the markets, we do have Microsoft earnings that are in after hours. And that's definitely going to cause a big move. The implied move by the market makers as far as the option chain is $20. So a $20 move on Microsoft in either direction is going to either boost up the markets a lot, boost up AMC, or drop the markets and drop AMC as well. And then more importantly, we do have the Fed meeting, like I've been saying for a while now. That is tomorrow. There's only about a 3% chance that the Fed does come out and actually raise rates tomorrow. But what the Fed could do is say that they have sped up their tapering so that they are done tapering and can confirm that they will start raising rates in March. And if they do come out and say, hey, instead of the 0.25% we thought we were going to raise, we're going to raise them 0.5%. That's definitely going to give the markets a little bit of a smack on the ass, a little bit of a clapping. So that's definitely going to affect AMC as well. I just want you guys to be mindful of this. What happens in the broad markets affects AMC also. But the more the markets sell off, the sweeter and the closer the tendies get to fucking landing in our portfolios. So that's good. That's really, really good right there. As far as the Stockholm Tracker data, we did see, like I said, quite a big bounce today. So in the last video, there was only 4,000 calls that were in the money. Now there's 7,087 calls that are in the money, 133,000 calls that are out of the money. For the put side, about 50,000 puts that are in the money, and out of the money puts at about 50,000 as well. So if we do see a big bounce, Microsoft earnings are good. Fed Jerome Powell is dovish, but not too dovish, because the markets are not going to like if he is too dovish. They're going to say, hey, you're behind the curve. You should have been raising rates months ago, and you're still not doing it. The markets could freak out over that. But if everything goes smoothly, then AMC could see a big short-term bounce, and you could see the puts run out of the money and the calls run into the money, and that will give us that double-ended buying power from the option chain. That's where you get the mega bounces. If you guys were following me back in December when we did see the mega bounces, the whole theory comes down to a lot of calls being out of the money compared to into the money, and a lot of puts being in the money that would run out of the money once you do see like a Wednesday, Thursday, or Friday bounce in the share price. So that's the scoop on that. As far as the max pain, just to reiterate again, if you guys have not seen that, the max pain is, drumroll please, $19 per share. So that would be a 15% move to the upside implied by the max pain. So that would be good. If we see that, I don't think anybody is going to complain about that, and we would be pretty happy to see that right about now. We still want to get above $20 per share. We are ultimately going to see the MOAS, in my personal opinion, in 2022, like 100% chance. Now, what I also want to point out is that the Dow claws back 800-point loss Tuesday for second stunning comeback in a row. Now, this might seem like a good thing, and it very well could be, but we have seen, or I should say we seen yesterday, the NASDAQ was down almost 5% and returned positive about 0.5% by the end of the day. The only times in history that has actually happened was during recessions, during 2008, as well as during the year 2000, when we were in full-blown recessions. And the average return after you see that happen, what we seen yesterday, is about a loss of 5% in 30 days. So odds are statistically we are in for a pretty big ass whooping in the market still to come, and I don't think that changes anything because we have seen these sharp drops and the price go back up by the end of the day. It looks good in the short term, but you have to keep your eyes and your mind focused on the end goal, which is the MOAS, and for that we need to see the markets going down. So that is going to be all for this video. I apologize how rushed it was. I have some things I got to go take care of. So love and appreciate you guys. Thank you for watching. Make sure to check us out on the live stream later on tonight at 10 p.m. to 11 p.m. Eastern Standard Time, 3 hours earlier if you're on the West Coast, or like an hour earlier if you're in the middle of the country, or if you're global, then you'll just have to figure out the time that is appropriate for that. If you guys want access to all of my trades in real time, check that out. Link down below in the pinned comment, as well as my Twitter account. Go ahead, follow me over there. That is free 99. Sometimes we post more, serious stuff. Sometimes we just post some funny stuff, like Biden telling Peter Ducey that he's a stupid son of a bitch. That was funny. Post that on Twitter. If you guys want access to that, check it out. Free 99. If you also want to get some free stock, link down below in the description of this video as well. Love and appreciate you guys. Thank you for watching. I will see you in the next one.